And this update is for Friday, the 15th of March, 2024, 8:20 a.m. Central Time. And we had a bounce late in the day that cut back a lot of the losses in stock indices, but they're breaking again one more time at this point. Now, there's a lot today to deal with. Let me show you something. Triple witching day. All right. So you know the last hour of trading and just before option expiration, there are different times you want to pay close attention. Things get a wild move. So the March contract and futures gone, options on it gone, stock options on individual stocks, they start moving about very violently, a lot going on. We just got the New York State Empire numbers and look at the reading, down 20.9. This is not a good number. They expected it at a -6. So it's 4 times as large as that. The prior was a -2.4. The employment index is a -7.1, so that's going the way the Fed wants to see it. The new order index fell hard, 17.2. The prices received were up. I'm not quite certain what to make out of that one. The prices paid were higher, but not as high as they were, but still going in the wrong direction. Inventories are dropping as I look at it, and the shipment index was down. That's supposed to say industry's looking good? I don't know what I'm reading wrong there, but I don't think I am. Import-export price headline, we imported 0.3, we exported 0.3. I call it pretty much a wash. We're going to get the Federal Reserve, the monthly industrial numbers, and we get the University of Michigan, the prelim consumer sentiment at 9 o'clock, and that generally gets a lot of fanfare. So you've got to take a look at the markets right now, and here's what you're looking at. Is this the beginning of the first real correction? Now, a couple of days I've been saying it's been 365 days without a 2% correction. That's not over time. That's a one-day correction. I want to make that clear. We went back on our AI. We found that in October, I think it was, you had almost a 3.7% correction over a 3-4 day period. So I wanted to make that clear. I had repeated it wrong, what was mentioned, and I just like to clear all those things up. But it just gives you an idea that the breaks, they're shallow, they don't last a long time. Traders have been plowing into things. The danger this time around has been that the rally has broadened and everything's coming down together with this one. Will that weigh on the market? Will you lose today the bullish embedded reading in the gold? I have been telling traders to be in that market, but with the smallest, the micro contracts, ready to go in the full size if the market reverses course from here and ends up and gets over basically to 2187 level. So I'm looking at that. The dollar is very flat, not a lot going on here. In the end, the big story in the end is the unions are coming through with very large pay increases. This should take Japan, gives it all the reason it needs, away from the negative interest rate. The question is that bullish or bearish for the yen? The yen is down points right now. A lot of people have bet already on the stocks. They're playing that that's where the play is. I'm hearing that people are buying the general insurers. They like that play in the market too. Today you're getting back down in the soybean, 7 cents. Corn's pretty flat. And you keep adding yield. So the numbers that we've been getting, these CPI, PPI, have weighed on things. A bit of a correction, and that's all that it is in the energy sector. I'm not seeing anything here that is terrible one way or the other. And I think you got close enough to your targets in the nat gas to call it a day. That doesn't mean that I won't want to get bearish again, but I think this particular level, the welcome mat was pulled away. So I told traders to run from that. Now, I want to remind you of one of the cool things that we have, and it's our futures trading kit. Now, if you're a Bitcoin, an Ether trader, we've loaded this one up with all kinds of information for you. How do the futures market work? Where are they? A lot of you have written for me to cover the ETFs in the SPDR ETF, and I will. They just began trading. I have to get a number of weeks on the weekly chart so it makes a little bit of sense. I hope you appreciate that. I typically let the first 3 to 4 months go by. Then I've got enough data to talk on the charts as to what chart patterns are. So you all did write me. You gave me what I needed, and I will get that done. Just let me get enough data on the charts. That's the key. Chart patterns. I look at these all the time. You might want to take a look. We give it to you in a PDF. You can download it, put it on your desk. You can send it to yourself as an email. It'll show up right that way. And as I said, all the courses that the CME has on these cryptos, how to trade options that are coming, all the different products that they have, you get it. How do you get this? Go to iraepstein.com. Under free offers, you'll see the futures trading kit, or give it a click right up there. I'll catch you over the weekend with our weekend edition where we look at the weekly charts. You have a great trading day, and remember, it's going to be a volatile day. Buckle up.